presenter, our final presenter, Mr. Barry Burns. And we are very, very excited to work with Mr. Burns here over the last little while. We recently released an add-on with him that he is going to be covering in depth with you, and really covering his 5 energy methodology. So I am going to turn the time over to Mr. Burns here very shortly. And please feel free to let us know if you have any questions.
All right, there we go. I think you should be able to see my screen and hear me. Oh, and there's even my little ugly mug there. Okay. So let's jump right into it. Yep, well, there's my ugly mug. Sorry you had to see that. Again, stocks, technical analysis of Stocks and Commodities magazine. I've received Reader's Choice Awards from them for quite a few years, and again, love the magazine. Highly recommend it to everybody. They also have some great online tools and articles, and oh my gosh, all kinds of great stuff. One of the most recent things I did was write a book called Trend Trading for Dummies, part of the Dummies series. It's just been available the last few months. Brand new, hot off the presses. Also been featured in some other books. The Complete Guide to Investing in Derivatives is one of them. I've done training for the CME group. Obviously, MetaStock with the plugin that is brand new. That's really the newest thing that we've come out with, and I'm very, very proud of that. I've done some training with the Eurex Exchange. HighProfitCandlestickPatterns.com is actually my website, so I do a lot with candlesticks as well. And because of that, I was featured about 8 pages or so dedicated to me in the Complete Guide to Using Candlestick Charting, another good book. You've heard a lot of disclaimers already, so I won't spend a lot of time on this, but I do like to just make sure that in case there's some new people who came into the webinar who didn't hear them earlier, I feel it's very important that we do this so everybody is very aware and fully up to speed that trading is not suitable for all people. Also, some markets are leveraged, and it can be possible to lose more than the amount of money you deposited for a position. Talk to your broker. The bottom line is on that. Talk to your broker and find out what your maximum risk exposure is, depending on how they manage accounts, what type of market you're trading, and so forth. What margins made available to you personally. Your broker is the one you should talk to about that. But know what type of risk exposure you have, because it is risky. Trading is extremely risky. Even for professionals, it's still risky. The risk never goes away. You manage the risk. That's what good traders do, is they learn how to manage that risk and hedge their positions and so forth. But because the markets are so risky, we really need to only trade with funds we can afford to lose. We call that discretionary money. All information in this presentation is for educational purposes only. I will not be giving out any specific buy or sell advice. The use of the information in this presentation is entirely at your own risk and for general purposes only, so we assume no responsibility or liability for errors or omissions. All right, so there we go. My lawyer is smiling. As I've talked with traders, and I've been trading since, well, my dad was a stock trader actually, and he got me into it because it was his passion and avocation in life. And so he started me out when I was 8, and I'm now 56, so I've been doing this for a couple of years. And then eventually when I started teaching, I got very interested in finding out what problems and struggles and frustrations were common among people. And so here are the ones that I found. They were worded a little differently, but see if any of you can relate to this. One was people said, well, I enter the market, I take a position, let's say you're going long, and right after the market fills you, boom, market turns around and stops you out. Then, after you get stopped out, the market turns back around in your original direction and goes to the moon. And that, again, that concept worded in several different ways was one of the most common issues that people responded to. I've done many surveys, I've done a lot of chat rooms, and again, years and years and years, thousands of students, and I hear this a lot. What is that about? That's about timing. That is about timing. You got the right direction, but you didn't enter at the best time. And so that's the key issue there. Here's another one that people comment on, saying they get out of big moves too soon. they take their profits too soon, so they don't make the huge profits. The market keeps going and going and going and going after they get out, and they feel like, gosh, I left all this money on the table. When do I get out? When do I exit? Here's another one. Getting stopped out too often. Not knowing the best place to position your stops, your protective stops, so that you're protecting yourself, but you're not doing it too close and not allowing the market to have its noise, which it does have. Not knowing the best place to exit the market in general. Trading trends that don't follow through. People are very familiar with trend trading, and I wrote a book about that, as I said. But so a lot of people can see a trend, but then it seems like whenever they get in, then boom, the trend ends. And it's the famous slogan that people say, the trend is your friend until the end. Well, so we want to get in early, not late, because the later we get in, the more likely it is to end. So how do you know when a trend will actually follow through? After you get in. That's the key. Not identifying a trend in hindsight. Hindsight's 20/20. That doesn't make us any money. What makes us money is establishing a probability scenario of what will happen after we take our position. And by the way, there's no certainty in trading. We never know what's going to happen with 100% certainty, but it's just developing a probability scenario that over a large sample of data will put the odds on our side. So that's what I do. My trading methodology, and by the way, today I'm going to give a lot of focus to timing your entries. We'll talk a little bit about exits, but primarily I'm going to be talking about how to time your entries. Because again, as you notice, with all those problems that people raise, timing was involved in all of them. Getting filled, getting stopped out, and then the market going back in your direction was a timing issue. Entering into a trend, but then the trend fails. Why? Because you got in at the end of a trend. There was a trend, but or getting out too soon, and then the market continues to go. Again, that's a timing issue. So I have found this to be one of the biggest challenges that traders have. If we were to summarize all of those into one word, it would be timing. Traders have problems with timing. So I'm going to talk about that, but I want to put it into the context of my entire trading methodology because timing is just one aspect of trading. So we'll start out here with the next 10 minutes or so, and I'll give you an overview of my entire trading methodology. And by the way, I like to call it a methodology because I consider my trading very methodical, meaning it's very rule-based, very objective, very measurable. And I don't use the word system. Personally, I use the system for computerized trading models. But with methodology, again, I'm referring to things that are objective, rule-based, and very measurable. So here's how I establish a probability scenario, and there's many different ways to groom a cat, so many different ways to do this. But here's how I have eventually put together my methodology that works for me. My methodology is all about one thing, measuring what I call the energies in the market. Now, what are these energies? And by the way, before I get into the specifics of the energies, what I mean by energies are the actual energy of money buying and selling in a given market, whether it's commodity, stocks, futures, forex, options, whatever. So it's the energy of the flow of money. That's what I'm referring to. All right? So there's 5 energies that I look for in every potential trade. And when I look at a chart, and I'm a technical analyst, I look at charts, that's how I trade. I don't really do too much with fundamental analysis. So, because to me, the technical analysis is what's actually happening now. Fundamental analysis is good. It has its place, especially with investing. But I'm more of a short-term trader, and so I just want to know, well, what's going on now? Because fundamental analysis, my dad was big on it, so I've got nothing against it at all, and he did very, very well. But, you know, sometimes fundamental analysis kind of tells you what people should do because sales are good, profits are good, PEO ratio is good, whatever. But people don't always do what they should do. People don't always do what is logical. People can get irrationally exuberant, to repeat a term, but that can happen on an intraday basis as well, and they just throw logic to the side because they get all excited about something. Not necessarily logical, not necessarily based on fundamentals. Again, what makes the market go up is people coming in and for whatever reason, logical or even illogical, buying, shorting, etc. So with technical analysis and using indicators and various things like this, I'm seeing what the market's actually doing. What are people actually doing? Where's the money actually flowing? That's what moves the market. So when I look at a chart, I always look at it in this order. I look for 5 things, these 5 energies, always in this order. And again, that goes with the principle of using a methodology and being methodical. The markets aren't always logical. The markets aren't always orderly. So what I have to do is I have to make sure I'm functioning in an orderly manner. I'm keeping my center. I'm staying calm. And I make the market come to me. I don't chase the market. So I'm looking for orderly patterns. And if the market's not giving that to me, I just keep my powder dry and I stay to the side and I wait. So when I look at a chart, to keep my mind orderly so I don't get overwhelmed with the endless amount of information available about the markets, I decide my game is just going to be these 5 energies. All the rest, other people can play that. That's fine. But this is my game. And this keeps me from getting overwhelmed emotionally and psychologically. And too much information leads to overwhelm, and an overwhelmed mind cannot act quickly and decisively. So, having said all of that, this is all I look at. Number 1, trend direction. So my first decision is, okay, what is the trend? That's a lagging indicator, but where are we up to this point on the hard right edge of the screen? Which side of the market am I looking to trade, long or short? All right? Now, I'm not taking a trade yet. I'm just deciding which side of the market I would trade. Number 2, momentum. Energy number 2 is momentum. That has to do with the strength of the trend. Now, this is very, very important because there's 2 kinds of trends. Trend just means direction, up or down. But I can be walking north, and in one step, I can turn around and go in the exact opposite trend. I can start walking south. So momentum refers to the strength of the market. So momentum there is no such thing as a indicator that's always leading. And by the way, I'm not even talking about an indicator here. I'm actually talking about the energy. Now, we use indicators as tools to measure the energy. But momentum is more like a locomotive going down the train tracks. And it has a lot of weight behind it. So it's not only going in a direction, but it has a lot of weight. And you can pull that brake at any given moment, but you know that that train is still going to keep going. In this case, we'll say north for a little while. So in that sense, momentum has a type of leading indication to it, in the sense that it's not going to stop on a dime. And so momentum becomes very helpful in trading in that sense, that if we time it correctly and we see an uptrend, for example, has a lot of momentum behind it, we should be able to get at least one more higher high after we enter, which again is the important part. From there, we can manage our position, move our stops, employ our risk management, and so forth. And so momentum in that way can, at times, function as a leading indicator, potential leading indicator. Now, number 3 is cycle. So here's where we come to timing. And this is why I wanted to share my overall methodology with you quickly first, to show you that timing doesn't even come in until step 3. So trading is not all about timing. It's not all about trend. It's not all about momentum. In fact, no one of these things will make you any money at trading at all. But after I find a trend and it has momentum behind it, then I go to step number 3 and I say, okay, now when do I want to enter this trade? All right, and we'll talk more about it, so I won't speak any more about it right at this moment. Step 4 is support resistance, buying, selling zones. And there's all types of support resistance levels. There's floor trigger pivots. There's previous major highs and lows. There's Fibonacci, obviously, previous day's highs and lows, value area highs and lows, so forth. But what we want to do, of course, is to buy off a significant support level and short off a significant resistance level, and we also use them as profit targets. And then finally, the fifth energy is the fractal energy. Well, I call it the fractal energy. It's just a fancy name for using multiple time frames. So if I'm looking for my setups on a daily chart, I would also then look at a weekly chart, and I would want to make sure that weekly chart is supporting the direction of my trade on the daily setup. And you can do the same thing with intraday charts. If I'm trading, say, a 5-minute chart, I would then look at a 15-minute chart. I would call that 15-minute chart my fractal energy. Multiple time frames, nothing new about that. That's as old as the rocks. But I do it maybe a little differently than some other traders do, and maybe I'll get to that in a few minutes. So the whole reason, again, of looking at these 5 energies is simply to determine a probability scenario. And the way I do that is at each potential entry point where I'm considering buying or selling, I just ask myself one simple question, and that is, how many of those 5 energies are aligned, going long or going short, bullish or bearish? That's it. Okay. Then I give each setup a score of 1 to 5. Based on that, obviously, the higher the score, the higher I consider the probability of success. I liken this to taking each trade to court. Now, what I mean by that is you need 5 independent witnesses to establish a preponderance of the evidence. So the key word, the operative word here is independent. And what I mean by that is if I were to just have, say, 5 trend indicators on a chart and all 5 were bullish, that's not the same. That's not what we're looking for. Because the indicators, some people believe in them, some people don't. I just think indicators do what they promise. They indicate. Hey, if they made us money, they would call them money makers. So what is an indicator? Well, literally an indicator is just simply a mathematical formula. Input goes in one side, a value comes out the other. Now, I use these indicators or these formulas as tools, as instruments to measure an individual energy. So to me, they're like the instruments on a cockpit in a plane. You can fly. I've got a friend who flies. He's got a 4-seater little plane, and he'll take me over to Catalina Island, and it's great. We have a great time. And he's been flying for a long, long time, but he still brings out his little check sheet before we take off and goes right down it visibly one by one. I'm sure he's got the thing memorized, but you know what? I'm kind of glad he does go through that check sheet. It makes me feel more comfortable. And that's what I'm doing here too. Now, he can fly that plane, and he can look out the window, and he could probably guess what his altitude is and be pretty close, or what the tilt of the plane is from wing to wing or from nose to tail, and be pretty close, what the speed is. But he's got gauges on his instrument panel of his cockpit, and each one of those instruments tell him exactly what the altitude is, exactly what the speed is, exactly what the tilt of the plane from wing to wing is. And that's how I see indicators. They give us a very definitive value for each energy that they're measuring, so that our trading becomes based on objective numbers and not on just looking at a chart and say, well, it looks like it's going up, and say, well, the trend is up. No. Got an indicator, an instrument that tells me what the value of that trend is, an exact value. And that still doesn't mean anything to me as far as making money goes, but at least I know what that energy is at that snapshot in time. Now, again, we're trying to establish a probability scenario that helps us make money in the future. Nothing forecasts the future with perfection. So we use these 5 independent witnesses. Each one of these energies that the indicator measures is independent of the other 4, uncorrelated to the other 4. So for example, Just a quick one. Let's say that price is trending up. Well, a lot of times I'll see price trending up, and then I look at momentum, and momentum indicator is also bullish. And that makes sense. Other times, price is trending up, and the momentum indicator is totally flatlining. Then those two energies are not aligned. It's an uptrend, but it's a weak uptrend, and I would not buy into that. Other times, price is trending up, and momentum, the indicator on momentum is actually going south. It's actually going in the exact opposite direction of trend. So that's what I mean when I say they're uncorrelated. You see, they can be doing totally different things. And that's true of all 5 of them. Each one of these energies is uncorrelated to the other 4, which is exactly what makes it significant when all 5 energies are bullish or all 5 energies are bearish. And that's what gives us a probability scenario. Okay, so let's put it all together here and show you visually. Sometimes it's easier to just see it visually than it is to talk about it, but you understand the concepts now. So here's Starbucks, and this is an intraday chart, 10-minute on the left, 30-minute on the right. So our setup chart is the 10-minute on the left. Our confirmation chart, or our what I call the fractal energy, is the 30-minute on the right. So we've got, these are our 5 energies, and that's all I do all day long is I just go through these 5 energies. So my setup chart's the 10-minute in this case, so the 50 MA. Okay, and by the way, this, what you're seeing here is the plugin, the Top Dog Trading plugin that we have for MetaStock. So it color codes trend, and if you see down here this ribbon, downtrend is color coded with red, green color codes for uptrend. So again, very measurable. Okay, that's number 1. Then number 2, are we early or late in the trend? That's very important. Remember, not only do we want to only trade long when we have an uptrend, but we also only want to trade long when that uptrend is early. So we have wave counts, and wave counts come with the plugin as well. So wave 1, that's the first higher high in an uptrend, in wave 2. So that's our first retrace in the trend. That is the earliest possible you can trade a trend with the retrace. So waves 2 and 4 are the ones that we like to take. So that's what we've got. So we're early in a new uptrend, so we've got a score of 1 so far. Is that enough to take the trade? Absolutely not. The number 1 does not give you a probability scenario. Then we go to number 2. What's 2? Momentum. Okay, here's our momentum indicator, Top Dog momentum. It's angling up at that time too. See the vertical lines, what we're looking at here. It's angling up, so momentum is starting to move up. Great. So now momentum is up. Number 3, cycle low. This is where your timing comes in. So where do we want to buy? How do we know not to buy off of this? This is a 15 EMA, this black line. How do we know not to buy the bounce off of that? Well, because this is our timing indicator here. It's a modified stochastic is what it actually is, but it is customized and modified. It's not your default. And then there's patterns that we trade on this. And this little pattern here is called a mini divergence, and these are actually marked in the, I don't have it marked here, but it is marked in the, it's visibly marked on the plugin with Top Dog Trading. And what that actually is, it shows a momentum shift that the market is starting to go up, and this momentum shift will occur on this indicator before it shows on price. Remember how I said momentum can be a leading indicator? It can shift before price does, and that's exactly what's happening here. On %K, for example, we've got a little higher low than we do on price. Price is still making a lower low there, okay, on that green bar. Okay, number 4, support. We want kind of some sort of support. The 50 simple moving average is providing support here. We have a rule with support, which we call market can either break or pierce support levels. Support levels are not lines. They will look like lines on your chart, but they're actually zones. And so we say as long as a bar is touching a support level, even if it's below it, it's still holding support. And that green bar is touching it. The 2 bars before it are inside bars to that. and so that support level is still holding. Again, everything's very objective rules to all of this. So we've got support. Number 5 then is the next higher time frame. So we look over here. Now, a lot of people will use trend, and they'll say, well, only trade in the direction of trend of the larger time frame. And that's fine, and that can work very well, in fact. However, what I like to do is I like to say, no, I'm going to confirm my trade with the next higher time frame on momentum and cycle. So you see I've got a cycle low here, just like I have a cycle low here, concurrent cycle lows. 50 MA is going down right at this time. It's just starting to turn over, but see momentum again is already going up. See the black line here in momentum? It's already going up, and then the red line is actually our faster momentum line. The black line is a moving average of the real momentum line, which is the red one. And so you see how the black line is moving up while the red line here, trend, is actually down. Momentum again, leading trend. And so that's a 5 out of 5 trade. We're trading an uptrend early in a new trend, momentum, bullish, cycle low, time to go long, support, yes, and number 5, momentum going up on the larger time frame. And that's it. 1, 2, 3, 4, 5. That's the system. Okay, so now I'm going to give you at highs and lows for entries and exits. One thing before I get into this, when I talk about pinpointing market highs and lows, I'm not talking about major highs or major lows. I'm not talking about major reversals. What I'm actually talking about is, again, trading in a trend, but just finding the final retrace low in an uptrend before the trend resumes going up. All right, those are easier to find and easier, you have a higher probability of identifying those than major highs where the market's This works really, really good. So as I mentioned, we've got the plugin, this Top Dog Trading plugin for MetaStock that does all that stuff for you. It measures all. But I'm going to give you a little freebie here on the cycle indicator and how we create that. So cycle, which first of all, you're going to choose the indicator called the stochastic oscillator. Then we need to change it. And for %K parameters, we're going to do time periods at the value of 5. And slowing, we're going to change to a value of 2. Now, %D parameters, we're going to change that to a time period of 3. And the method is simple. Okay, and you can see the screen capture over here. All right, so we're using the stochastic, but we're changing it. Now, the stochastic indicator is actually a momentum indicator, but I found it works great as a cycle indicator when you change these inputs, and the irony is it actually works great as a cycle indicator specifically because it's a momentum indicator. All right, now hold on to that thought for just a minute because I know that might sound a little strange, but I'll come back to it and explain that. And then, oh, by the way, also with the horizontal lines, we need to put in 20, 50, and 80. 20, 50, and 80 on the stochastic. Okay, right there. So those horizontal lines, we use those, and I'll show you how we use those too. All right. Oh, I think it just brings up those, numbers. Okay. Okay, so now we've got the right indicator, we've got the right inputs for a good cycle indicator. Remember, though, people get so enamored with indicators. Don't. They indicate, again. By itself, this is meaningless. Like any one energy, it's meaningless. It only becomes significant when you use it with the other energies. That means we're not going to trade every cycle high and every cycle low. No, we're going to be very picky. We're only going to trade some of them. Which ones? Well, we're going to trade the cycles that are in the direction of the trend early in the trend. We're only going to trade the cycles that have momentum behind them. And we're only going to trade when the fractal energy is aligned. So we're certainly not trading every cycle high and low. And then here's a new one. We're only going to trade what I call second chance indicator patterns. So just like price can have different price patterns, head and shoulders, double tops, wedges, diamonds, all the different things that it has. Indicators can also have patterns. So I have cataloged what I call second chance patterns, and there's 6 of them. And what they do, I like to explain the meaning behind everything. What a second chance indicator pattern actually is telling you is that there is a momentum shift, not a shirt, but a shift at the top or the bottom of the cycle. Okay, you remember how I said the stochastic indicator is a great cycle indicator specifically because it's a momentum indicator? Well, this is where it comes into play. And that momentum can lead price. Again, all that comes into play as to why this works so beautifully. So when you see one of these second chance patterns, and I'll show you what it looks like in a minute, what it's telling you is there's a momentum shift at the top or the bottom of the cycle, and that's what makes it a high probability low or a high probability low or high. Now, I'm going to show you one which is called the mini divergence. Again, there's 5 more of these second chance patterns. There's 6 of them that provide extreme high probability that you found the final cycle high or the final cycle low. All right, so here's how we do it. First of all, this is what we want to avoid. This is why it's so important. So here we've got a downtrend. Okay, the red line's the 50 EMA, the black line's the 15 EMA, by the way. So here's our stochastic oscillator, okay? And there's our 3 horizontal lines, 80, 50, and 20. So it gets up here to 80 and hooks down, and that looks great. We've got resistance, we've got a downtrend, we've got resistance, and it looks like it's a nice cycle high. Well, it actually is a cycle high. But then the market comes down, just pretty much makes an equal low, and then what's it do? It makes a higher high while we're still in the downtrend, which means if you shorted here and you put your stop above here, you would have been stopped out. And then the market does continue down. So you had the right direction, you just traded at the wrong time. That's what we want to avoid. So how do we avoid it? All right, what we do is we look for these momentum shift patterns. So here we go again. Uptrend, 50 EMA is going up. Support at the 15 EMA. But now look at this pattern on the stochastic indicator. All right, the blue line, that's your %K line. That's the one that's important here. It's making a higher low. Price is actually making a slightly lower low between those 2 lows, or even an equal low, but no, that one's a little slightly lower low. That is a momentum shift. Again, momentum moving up, making a higher low before price does. That's your momentum shift saying strength has come out of going down and starting to move up, and therefore that's what makes this a high probability final cycle low that you could take long and not likely get stopped out. And boom, we found the right low to go long. All right, same here. You can do this for reversal trades, by the way. It's a little trickier. It's not as high probability, number 1. And number 2, the other thing you have to do is, again, timing also with regard to the trend. So we don't take reversal trades after waves 1 or 3 or even 5. Now, when I talk about waves, Top Dog Trading plugin measures waves differently than Elliott waves, by the way. And so you can, it's very objective, very measurable. It doesn't, change the wave count on you to try to fit 5 waves into every trend. So therefore, you can have more than 5 waves. And there's an advantage to that, and that is that we consider extended trends to be anything after 5. Those are the ones then we would consider taking reversal trades on. So then we could look for the mini divergence here. That's what we have. Lower low on price. Again, higher low, there's your momentum shift on percent K, showing that this move down, it is going down lower low, but on weakness, and therefore we could try to get in long before a new trend actually is confirmed. Also, it can work for contraction patterns. The market has cycles of expansion, contraction, expansion, contraction. Volatility patterns. And again, this can work very well. Again, I don't like to trade breakouts of contraction. Nothing wrong with that. You can do that. A lot of people do that. I prefer to trade inside the contraction, get in earlier. Everything I do with top dog trading is designed to get in before everybody else. So if there's a high here and I'm looking for it to break out to the downside, I want to short the high. I don't want to wait for it to break out. Then I'm there with everybody else. So again, higher high on price, lower high on percent K. See that? The blue line. Momentum shift. This moving up on weakness, and I can see that on the indicator before I can see that on price. So let's summarize here a little bit. Had to go through this pretty fast, but all we're doing is we're waiting for the alignment of the 5 energies to put the odds on your side. And I was invited to a trading club a while back, and they flew me out there. And great trading club, by the way, really wonderful people, very exciting. Had a beautiful time, very receptive. They took me out to dinner, some of the leaders of the trading club. And they, before dinner came, they proudly pulled out of this big, it wasn't even a briefcase, it was a big, like almost suitcase, big, huge book that they had been compiling. And this particular group within the group had been creating a trading system, their own customized trading system, and they were doing it as a community project. And they were very proud of it. They hadn't finished it yet. They were only up to about 250 pages so far of their little trading system and all the rules. And wow, I looked at that. That's amazing. A lot of work went into that. Now, I don't know. I've never heard back from them, if it's finished or how well it's doing or anything like that. Here's my trading method. It's one sentence long. Basically, all we're doing, and it's always in this order, so I keep my mind orderly. I look at a chart. Number one, what's the direction of the market and how early are we in that trend? Which side of the market do I want to take? Number two, is that trend strong or weak? If it's strong, I'm still interested. If it's weak, I'm either not interested or I may even fade the trend. Number three, if the trend is strong, then I'm looking at what's the best time to get into the trade so that I get in on the final low before the market resumes its uptrend, or conversely, the final retrace high before the market resumes its downtrend, looking for one of the 6 second chance patterns. Want to make sure I'm buying off support, shorting off resistance. Why? Because that is a blockage of energy. See, on a retrace, the market should be making strong impulse moves in weak corrections, and therefore support resistance should be able to hold a correction if it's weak, and it should be weak if we're going to trade it. And then finally, after all of that, we look to our next higher time frame, and we confirm it by making sure we're trading in the direction of momentum of the higher time frame. And by the way, there's a reason for that too. There's a reason for everything I do, and in my courses I always give I call it a market logic. There's a logic behind everything that I do. So what's the logic of using momentum on the next higher time frame instead of trend? So let's say that we're taking trades on a daily chart and using weekly for confirmation. Okay, so there's a 5-to-1 ratio there. And so for the daily chart, we're going to have 5 bars for every 1 bar on the weekly chart. So the weekly chart's a lot slower. And there's a lot of play between the action of those two charts and the indicators and the price movement. It's like the first car I ever bought. It was a used car. I didn't have a lot of money, and so it was okay, but the car had seen better days, and there was a lot of play in that steering wheel. So I could turn that steering wheel a certain number of degrees to the right or the left, but the car didn't turn. So that was, that's the play. Same thing between a daily and a weekly chart. There's some play there. Now, remember, trend is a lagging indicator. So if you're going to use trend for your longer term chart, again, it can work out okay, but just understand you're using a lagging indicator on a already 5 times slower chart. Momentum, being the potential leading indicator, helps to tighten up the correlation of movement between those two charts. And so it can get you in on some earlier trades. And that's why I prefer to use momentum for confirmation on the longer term time frame. So the method is very robust, it's very adaptable. I trade all kinds of things now. My dad was a stock trader, so I started out with stocks, but then I got into futures was my next foray, and then currencies and commodities and options, and now I trade all 5 of those markets. And I use the same 5 energy method for trading all 5 markets. Also, I do investing in my retirement accounts, but I also do swing trading and day trading. Again, can still use the same 5 energy method for all these different time frames. Now, why is that? How can that be? Because some methods, let's face it, they're specifically designed just for Forex or just for E-minis or just for investing or certain time frames, and that's fine. But the reason this method is so robust and adaptable and works for all of them is, again, because all we're doing is we start with a chart. And then, it's just like I said, these indicators are just instruments that measure an energy. So we take our chart and then we put the instrument that measures the energies on there, like the dashboard. Then, whatever market you put on that chart, whatever time interval you put on that chart, those instruments measure the energies of that market on that time frame. It's just like you don't need a different speedometer whether you're putting it in a Toyota or a Ford or a Chevy or a Rolls-Royce. So it's very simple. It's very objective. We're pretty much just counting to 5. So I do have a special offer. We're going to get into the Top Dog plugin here in just a moment. But in addition to that, if you'd like to learn more about what I do and get some freebies, we've got some freebies for you. So I've got a 5-day video correspondence course that I'm making available to everybody on this webinar for free. And I call it a correspondence course because you get a new video every day for 5 days. And it's about what differentiates professional traders from amateur traders. You've heard me talk a lot about getting in early, and that is one of the differences. Professional traders generally get in earlier than amateurs. Amateurs wait for too much confirmation. They're kind of scared, they hesitate, they have a lack of confidence. By the time everything is confirmed, it's usually too late. The trade's done, the trade's over. So I show you how to get into trades earlier and then how to manage the risk that accompanies that. They're just quick little 5-minute videos. They're very short. And then also I give you in there on day 4, I think it is, my rubber band trade. This is an actual trade setup you can start using right away. It's a scalping setup. It can be used on any time frame. In fact, it's a great trade. Every time it comes up, I trade it to this day. And you can get it by just going to topdogtrading.net. Notice it's not .com. It's .net, topdogtrading.net, and subscribe to the 5-day free video correspondence course, and that's yours for free. Now, it looks like I have about 4 minutes for questions, and so I'm going to take those 4 minutes, and I'm going to answer any questions I might have, and then I'm going to have to turn it over to Kelly or whoever's doing the presentation on the Top Dog Trading plugin. So let's see. Oh my gosh, there's a lot of questions. Okay. Well, I'm definitely not going to be able to answer all of these. So let me do this. My email address is up there under my name on the slide, barry@topdogtrading.com. So if I don't get to your question, feel free to email your question to me at barry@topdogtrading.com. Now, let me just go through these here real quick and see if there's any that come up more than once, and I will answer some that look like it's one that a lot of people would be interested in. Okay. All right. Well, actually, some of these have already been answered now. It looks like yes, you can scan for stocks. Absolutely. A couple people asking about that. In MetaStock, that's one of the great features of MetaStock. It has one of the best scanners, if not the best scanner I've ever seen. And we have scans specifically designed for these setups, for trend trading setups and even reversal setups. So yes, and it scans on multiple time frames. So it will actually scan for all 5 energies. Yes. Good question, and that's one of the biggest benefits of the plugin, and it works great. Okay, so some of these questions were asked before I finished, and so they have been answered. Okay. The email is barry@topdogtrading.com. Yeah. So for the video course, it's .net, but for my email address, it's .com. Thank you for asking that question. Good. The difference between my wave counts and Elliott wave counts. My wave counts are actually very simple. There's some specific rules to it. Essentially, it's higher highs and higher lows. But there's an extra little rule there with regard to candlesticks so that the higher high can't just be simply a higher high. Otherwise, it would be called a rejection of value to make a slightly higher high, and that's actually a bearish energy. So in that rejection of value term comes from market profile. So what we say is that the real body of the candle has to be above the high of the previous wave. Then it counts as a new wave high. That's the rule that we put into the programming. Elliott wave, they've got, their basic rules, and then there's been a lot of rules that people have added to it since, but I won't explain Elliott waves, but it's more complicated. Mine's pretty simple. But again, the plugin, it puts all the wave counts on there for you, so you don't even have to worry about it. How accurate is the method to detect a trend up or down? Well, very accurate. It's always accurate as to the trend up or down. The point is, what will happen after you get in, right? And that's where the 5 energies come in. The 5 energies, it will give you what the trend is at that given spot in time, but again, what we want to know is what's likely, never any certainties in trading, but what's likely to happen after we get in, and that trend alone doesn't help you there. No one of these energies helps you there. That's where we put all 5, remember, independent, uncorrelated energies together to give us a preponderance of the evidence. That's what gives us an edge, and that's what gives us a positive expectancy over a large sample of data. Even then, obviously, we put our stops in, we hedge our positions, we use our risk management and money management.
Hey Barry, this is Kelly. Your sound just stopped, so you may want to just double check your...
There's all kinds of indicators you can use, but these are the ones that I use. So, I mean, if I used others, then you would say, can you use other ones than those? So that's the thing with the markets. There's so many things that you can do, so many tools you can use. You just have to, choose some and use them. And you have to know how to use them too, the techniques on how to use it, what patterns to look for, and all of that. Okay. Last one. I'll ask this one because this is a very good one. How do you determine your stop loss point? Okay, so that's very easy. Since we're buying a cycle low, I'll just use a long example, obviously be the opposite for a bearish position. We simply put our stop immediately below the cycle low we're buying, the lowest low of that cycle low. So it's a very tight stop. I don't employ ATR stops or anything like that. They're too loose for me. I like a very tight stop because when I get one of the second chance patterns, the accuracy of that thing being the final cycle low before the next cycle high is so high, I can keep my stop literally 1 penny below that cycle low. Now, if it's a really high-priced stock, $200, $300 stock, I might use 5 cents below the cycle low. If it's Forex, by the way, then we have a little different rule. The rule is for entries and exits, it's always 1 pip plus the spread, because the spread is essentially commission a lot of times. Okay, so anyway, I've got to stop there and turn it back over to have them talk about the Top Dog Trading plugin, the details on that, and the offers today. So thank you to MetaStock, thank you to Technical Analysis of Stocks and Commodities Magazine, thank you for everybody who attended today. I appreciate it. By the way, I appreciate all the kind words that are coming in right now too. Thank you for that. And happy trades, everyone.
Well, thank you, Barry, very much. As always, very educational presentation. Always gives us a lot of insight. I know it's something that we've gotten from a lot of the presenters today. I would like to introduce you really quickly to the Barry Burns toolkit and what it's capable of doing within MetaStock. Barry's talked a lot about his 5 energy method and what it does, and that's really what we've incorporated into the add-on for the Top Dog toolkit. So it's going to look at the 5 energy method. It's going to look at trend, momentum, cycles, support and resistance, and scale. And what it's going to do is incorporate these things together because they are very significant on every trade. Everything corresponds to these 5 energies that Barry's put into his toolkit for MetaStock. Each energy is not correlated or loosely correlated to the other 4 energies. They are all significant in every trade. So what it's going to do is look for these patterns in trading. So we're going to look at new trends, long trends, reversion to the mean, and momentum as part of this setup. So it's going to go through and look for all these different patterns for you. So inside the Top Dog Toolkit, what it will do is it has all these different scans. And in my last presentation, I talked to you about the Explorer and what the Explorer is capable of doing. So what you can do is you can take any of Barry's setups, put it into the Explorer, have it filter your list of stocks, and have it identify the ones that are matching your criteria. So it makes it very easy to use his toolkit to identify what you want to be able to do, and then go into the Expert Advisor and apply that to a chart and have it give you your entries and exits based off of that. So here's an example of this on the chart where it can actually give you your wave counts based off of Barry's counts, and then give you your, again, where you should be getting into the trade, where you should be setting your stop, and how you should be setting your targets. Okay. So this is an example of some of the commentary that it gives you when it's giving you commentary to be able to walk you through the trade. And that's the biggest thing about the methodologies that these presenters have put together for you today, is to help you make the right trades. Not just make a trade, but make the right trades. And that's what they're after, is to help you in the best possible way with your trading. Okay, so here's the indicators that included. It's looking for the auto Fibonacci lines, swing lines, the floor trader pivots, the second chance lines, the selective pivots, and then his different stochastic indicators. The templates, he's got his daily chart template, his intraday chart template, and his weekly template included for each of the different time frames for you. And then how much does this one cost? Well, this one's a $4.99 one-time cost. It's $4.49 for Summit attendees, so you can call and get that from us today, or chat with us at metastock.com/saleschat. And we can help you get this set up. It is actually a downloadable product, so you can start using it today. And the same goes for all the different add-ons that we have today. We have Steve Bigelow's, which is a downloadable product, the Bollinger Band Toolkit, which is downloadable. Price Headleys we would need to ship out to you, but it's a very minimal shipping cost. The Prime Trade Select is a downloadable product, so you can start using it right away, and Barry Burns is downloadable as well as MetaStock being downloadable. So then you get the free 2 months in as part of the Summit Action Pack. So again, with that you get the 2-year subscription, Stocks and Commodities Magazine. Retail cost of all that, $2,700. Summit Action price is $15.95. All those add-ons are available on a 30-day money-back guarantee, so you're not out anything if they don't fit your trading style and what you're trying to accomplish in your trading. To order, you can call us right now at 800-882-3040 or visit us at metastock.com/saleschat, and we'd be able to assist you either way, 800-882-3040 or metastock.com/saleschat. From our sponsor, Stocks and Commodities Magazine, everybody gets a free copy of free 1 copy. Then take advantage of any of the services today and receive a complimentary 5-month subscription. Anybody that spends $300 or more will get a complimentary 2-year subscription. And then every subscription to Stocks and Commodities Magazine includes access to every article they've ever published for over 1.2 million traders since 1982. So you get a very good back history as well. And then MetaStock, as you've seen with the Forecaster video, that's just one portion of MetaStock and what you can do in MetaStock. There's a lot more that you can do with MetaStock, like scanning, back testing, the expert advisors available. And it's won its Reader's Choice Award for 25 straight years. I mean, you just can't ask for more than that out of a software. And then if you're interested in that, for the free trial, you can go to metastock.com/tradersummit 3-for-1, and that'll give you a 3-for-1 offer on MetaStock. Or if you're getting the action pack, what you're going to do is come across doing that through the phone or through the web. So we want to thank you for coming to the summit today and spending your day with us. I know it's been a lot of information today, but you really are. It's time to put into practice what you've learned, and you can do that by getting the MetaStock package and getting all the information together. So thank you for coming, and we look forward to talking to you at 800-882-3040 or metastock.com/saleschat, and we look forward to talking to you each individually soon. Thank you, everybody, for coming. We appreciate your time and your efforts in coming to the summit, and we will be sending out recordings to everybody after the fact as well. So thank you very much, and have a great rest of the weekend.